Hello everyone, today we are going to take a look at property acquisition transaction in QuickBooks. So we can open our file and let's read the task, let's read the problem. On November 1st we purchased and put in operation, that's important that we put it in operation, a truck for 5,000, a trailer for 1,000, and spent 2,000, including delivery fees on spare part, on fixing and upgrading that truck to bring it in operable condition. We paid cash for the trailer and upgrades, as well as 20% down payment for truck, and 80% of the truck we used financing. So what's important for us here? So we got a truck, 5,000. We did 2,000 additional expenses on that truck to bring it into operable condition. So if you go back to the lecture, you will see that this is a capitalizable expense. So you always need to check that to accounting rules, whether you need to capitalize those expenses. And we also bought a trailer. So we pay attention to capitalization criteria. We take a note that we need to reflect truck and trailer separately because those are two separate tangible, movable properties, and we can sell them separately. They can have a different useful life. So it's a good choice to account them separately. It is a bad practice, a best practice. Sorry. We need to take a note that QuickBooks Online doesn't allow us to depreciate the assets, so we need to depreciate it manually by doing manual entries, and we also do not have amortization schedule for loans, so we will need to repay that loan manually and allocate the loan payment between interest and principal expense separately. So what do we have here? Truck. We capitalize for truck 5,000. Let me make it this way. 5,000 plus 2,000. So these are eligible expenses for capitalization. We capitalize 1,000 for a trailer, and we calculate how much cash we spent on that deal. It's $4,000, 3,000 cash for trailer and spare parts, and 20% of the 5,000 truck value, and rest gas as a loan. So let's reflect it in our QuickBooks now. To do that, I will use a journal entry functionality. So let's see what we can do here. We start with the truck. I will add a new account. So that is fixed assets account. Under machinery and equipment account, let's call it truck. Truck. Let's call it truck 1, just in case. And description. You can actually put like a make and model here. We can put it in a sub account, but we don't have a lot of assets account right now. But if you want, we can create a trucks account and put a truck under trucks account. But I won't do that right now. And we also, if we have some basis issues, taxable basis issues, if we transfer assets between subsidiaries of the consolidated tax return, we might want to transfer the truck with some accumulated depreciation, but I won't do that right now. So I will just do truck 1, save and close. Okay, and it will be debit, assets increase by debit. It will be 7,000 truck. Okay, what name do I have here? We can put a vendor here. Not sure if it will help us. Okay, trailer. Let's add new account here. Fixed assets, machinery and equipment, trailer. Same in description. No other stuff. No, $1,000 debit. Trailer capitalization. Next one. What do we have here? 4,000 cash and a loan. Okay, let's do cash entry. Let's go by cash in hand. 4,000, and let's do a loan account. That will be. Let's put it into long-term liabilities. Notes payable. Let's call it Truck 1 loan. And let's put the same into description. Okay, save and close. 4,000. Okay, everything balances. Truck and trailer acquisition. Truck finance. We can put a vendor here, the one which provided us with a loan. Let's see. Okay. Just when we allocate the payments from the bank feed or by checks, we can then establish that vendor, so it will be easier for us to make payments. Okay, so we do not have anything, no assets, no loans for that truck on the balance sheet. Let's see the journal date. Our journal was November 1st, so we put November 1st here, and we save the entry, and we go to the balance sheet, and we see our truck and trailer on the balance sheet, and as well we see Truck 1 loan under long-term liabilities. So that concludes that part of the lesson on the asset acquisition. Thank you everyone. You can join the course using the links in the description to the video. You can subscribe to my channel and watch my other videos about accounting. Thank you. Have a great day.